So good afternoon, everyone, and welcome to today's webinar on why do I need an AML audit with Pat Estabrook from DG Legal. For those of you who don't know me, my name is Lucy and I'm an assistant consultant at DG Legal. So the slides for today's presentation will be sent over tomorrow, as will a recording of the webinar, and that will be available to you as well. This webinar is expected to last between 15 and 20 minutes, but if we do run over and you need to leave, you'll be able to watch the rest of the webinar at another time. We are in webinar mode, so we can't see or hear any of you. So please use the Q&A function so that the speaker can answer your questions. So just a little introduction of Pat. She has a hugely impressive amount of experience in compliance, having worked for the Legal Complaints Service, the Solicitors Regulation Authority, and as head of compliance of a large private law firm. Pat's particular areas of expertise include SRA compliance, file reviews, and complaints handling, but she also has a wealth of practical experience in law firm management. So without further ado, over to you, Pat.
Good afternoon, and thank you for joining this webinar on anti-money laundering independent audits and why we need one. Let's pass this next slide. It's all about me, and you don't need to know that. Okay, so what we're going to look at is why do we need an independent audit and what the SRA expects within that audit, what the word independent actually means within the audit function, and what's the point of the audit? What are you doing within the audit and what's the outcome of it? And once it's done, what you're going to do with it, and then summarize it. I should say that this is not intended to provide you with enough information to enable you to carry on and do your own audit. This is simply an overview of what the audit is intended to be, and I will give you some pointers if you do need to look at how you can carry out an audit yourselves or where you can go to obtain one. Okay, so why do you need an audit? The reality is Regulation 21 of the Money Laundering Regulations require it. It states that you have to, as all firms, need to carry out a risk assessment and where appropriate, and those are the key words, where appropriate, with regard to the size and nature of the business, you must establish an independent audit function. And the responsibility is to examine and evaluate the adequacy and efficiency of the policies, controls and procedures, and to make recommendations in relation to those policies, controls and procedures, then monitor that any recommendations have actually been followed. So the SRA, when the regulations first came into force, there was a general assumption amongst most law firms that the audit would only apply to those large law firms that carry out enormous amounts of regulatory work that falls within scope of the regulations. But the reality is that that's no longer the case, and it never actually has been the case. The SRA's outlook in November 2000, which is available on their website if you want to have a look at it, stated that most firms should be commissioning independent audits. And actually they state that only the very smallest firms do not need an audit. So you should be considering whether or not your firm needs an audit. Are you within scope of the legislation? So do you do any work which is transactional? If the answer is no, you don't need an audit. So if you only do criminal work, for instance, you don't need an independent audit. You're not going to be at risk of money laundering there, generally speaking. If you only do PI, you've got to be a bit careful there. Generally speaking, the answer would be no. If you set up PI trusts, you do fall within scope, but then it would depend on how many of those you do, whether or not you feel that you should be carrying out an audit. So those are the type of things you should be taking into account when you're doing your risk assessment and determine whether or not you need to do an audit or have an audit carried out within the firm. The report that the SRA published which details that they visited 74 firms over the course of the year, and 19% of those firms have never carried out an audit, and 51% required follow-up action because the audits weren't They weren't compliant, they didn't produce any information, they were just tick boxes really, they weren't carried out properly. So you need to determine whether or not you need an audit, and then who's going to carry out that audit. We'll cover that in a little while. If you decide you don't need an audit, you need to justify it. Okay, you cannot just ignore the fact that you the legislation says you need it. You have to justify it. You should document why, and that should be within your anti-money laundering policy. That's where your justification for either carrying out or not carrying out an audit should be. And if you're not going to carry out an audit, you need to explain why that is. Okay, and that's what the SRA will be looking at when they come to visit you. So the word independent is a little bit confusing. Most people, most firms believe that it means that they need an external person to do it. The legislation isn't clear, it doesn't give a definition, but the SRA is clear that it should be, if it's somebody internal, they shouldn't be marking their own homework. So you can't have your MLRO, your COLP, your MLCO carrying out this audit. Okay? So it can be, for instance, a senior member firm who doesn't carry out regulated work. It can be the MLRO or MLCO from another firm. It could be your office manager, with providing they have no regulatory or fee-earning role within the firm, or you could have reciprocal arrangements with another small firm to review one another's compliance. Or you can go to an external third party. There are some very good firms that carry out independent audits. Obviously, DG Legal do it. There are other firms as well. There's Teal, they carry it out. There's a company called Jonathan Bray. I'm not recommending any of these. They are available, and I do know that they're highly regarded. But you should do a search yourselves and perhaps talk to other firms and see who's done theirs. But your first step really should be determining whether or not somebody internal who can carry out the audit for you. But as I say, they can't have any involvement in drawing up the policies, the processes, or actually working in a transactional area. Okay, so what is an audit and what's the point of it? It's to test the firm's anti-money laundering program and policies. I carry out quite a lot of audits, and I see some horrors, and I see some really good practice. So at a minimum, what you should be looking at with an audit is a review of the firm-wide risk assessment. That's always the starting point. And quite often that's where, right at the very beginning, that's where it falls down. Because the firm-wide risk assessment is not adequate. It simply is, this is what we don't do and this is what we do, without any real analysis of what the risk to the firm is of the work that's been doing, or the transactional type of work that's being done, the type of client that you've got, that type of thing. And then out of that, of course, we'll follow your policies and procedures. They all need reviewing. Your file risk assessments again, and your money laundering training records and the contents of the training. That's really important. A lot of firms simply once a year use an online system, which when I do the audits and I speak to staff about this, they always say it's repetitive, it provides the same information over and over again, and really they switch off and they don't hear what's being said. So you, as senior managers, as COLPs, COFAs, MLROs, you need to be considering the type of training that your fee earners are getting. Then the audit should also be looking at the money laundering registers. So if there's been any SARS, whether that's been correctly notified to the NCA and how that's been recorded, and whether or not they're filed correctly and away from the client file. We then move on to interview with staff at all levels. And the purpose of the interviews should be to determine whether the individual staff understand the policies and procedures. And at this point, I regularly find that pretty much they know what they should be doing. And they know pretty much where the risk assessments are and the policies and the procedures. So they indicate that they are aware of what the firm says they should be doing. Then we move on to the file reviews, and that's where I discover that although the firm have got policies and processes and perhaps a good risk assessment, and the staff say they know what they should be doing, the file reviews very often demonstrate that the staff are not doing what the policies and procedures dictate they should be doing. And an example of that I come across regularly is source of wealth checks. When I interview the staff, I ask them to explain to me what the difference is, what their understanding of the differences between source of funds and source of wealth. And most of them know what it is. Sometimes they're not sure. Sometimes they think it's the same thing. When I look at the files and do the file reviews, it's very clear that source of wealth checks have not been carried out. And failing to carry out the source of wealth checks is a real issue, and it's a big risk for firms, because without checking the source of wealth, that's where potentially money laundering can and does take place. So the firms are leaving themselves open, because the firms aren't carrying out compliance checks themselves on the files. They may well be doing file reviews to ensure that the file is progressing properly, that type of thing, but they're not looking at the compliance area. And that, as I say, leaves the firm open to a high level of money laundering risk. So in effect, what you're doing is determining whether is the firm and the staff, are they actually doing what they say they should be doing that's in the policies? And from that is produced a report with recommendations in it for the firm to identify what needs to be done. And the report should detail good and poor practice and provide recommendations. This report should not just be put in a drawer and left by itself. It should be produced at board or senior management level for review and determination of what the firm is going to do about the recommendations. And they should implement the recommendations and then keep evidence that they have done what they needed to do. Because at the next audit that is carried out, there should be evidence of the recommendations being implemented, and that should be produced to the auditor to enable the auditor to go back and see whether, although the firms say they're doing what the auditor recommended, have they actually done it? There should be a clear difference between what was the start, what the evidence showed at the first audit, second audit, whatever, and then the next audit. Has that work been carried out? So as I say, the independent audit, there are lots of firms out there that do this. You should be considering doing it once a year, actually. And the reports then are collated. The SRA will ask whether or not you have had an audit done. I don't know whether you're aware, but the SRA at the moment are carrying out a 3-year rolling programme, and they will visit or do desk-based assessments on all firms that do transactional work. So no matter how small you are and how big you are almost certain to receive a visit from the SRA over the course of the next 3 years. They've been recruiting to ensure that they can, they have the numbers of staff they need to do this work. The good thing is that where they see that, generally speaking, the firm is trying to comply, they will work with the firm. Whereas historically, they would have, their first step actually would have been to refer for regulatory action to be taken against the firm. So the firm will receive a compliance report with a list of actions that need to be taken. For instance, a firm that I was working with week before last, all they had to do was review 30 files and produce a document showing that these 30 files had got the risk assessment carried out correctly and send that information to the SRA. Another firm that I was working with, their compliance list was pages long, but the SRA want to work with the firm. They know they're trying to actually implement what's required, so they're not passing them on for disciplinary work. But don't be fooled, they will if they need to. If you're not compliant and you're not willing to work with the SRA, then the SRA will take disciplinary action against the firm. And one other point that I came across last week, which was really interesting, in relation to an independent auditor, the documents that have been produced, if they've been produced by, as I said, by the MRO, the MLCO, the COG, then that person cannot be the independent auditor. But a firm last week, they were told that it was absolutely fine for the COG to be the independent auditor because the documents, all of their documentation, had been produced by DG Legal. So the members of the staff internally in the firm weren't involved in drafting the documents. So if you do have an external body providing you with documentation, then you will be able to carry out your independent audit internally, and it can be a member of staff that is, you wouldn't necessarily think could, so your MLRO, your MLCO, or your COG or your COFA, which makes it slightly easier for firms because an audit takes about 3 days and it's expensive. And I appreciate that, you know, if you're a small firm, you won't necessarily want to do that. You'll try your best to do it internally. So in summary, consider whether your firm needs an independent audit, carry out a risk assessment, type of work you do, how much of that work you do, what your client base is, if it's all local, and you generally speaking, you know your client base, and you're a high street firm, and you know you're at low risk of money laundering, that's fine. But if you take your clients through, I don't know, Purple Bricks or one of those online systems, so you don't know your client base and you do a lot of conveyancing, then you're going to need an independent audit. If you feel you don't need to do an independent audit, it's absolutely vital that you document why you don't need it. The SRA will require that evidence of why you feel, having carried out your risk assessment, you do not need to do the audit. And as I said before, that should be in your money laundering policy. If you do carry out an audit, make sure that your recommendations are implemented, otherwise it's just a waste of time for everybody. And why you need it, don't forget, it's a requirement of the legislation. Okay. So I see we've got a question come in. So if anybody's got any questions, then please do go through. Somebody said, oh yes, they have copied the slide. Yes, we're sending copies of the slides out to anybody who's registered now. Has anybody got any other questions that they'd like to ask? No. How frequent? Legislation doesn't state it. I would suggest it depends on the volume of the transactional work you do and the type of transactional work you do. So if you're small but you feel you need an audit, you probably could get away with it every 2 years. But if you, generally speaking, it's an annual thing. How do I work? I hope that answers. Yeah. So generally speaking, it's annual. How do I work out how many files that need auditing? That's a really interesting question. So what I do is I request a list of fee earners that work in transactional work within the firm, and I then ask for a list of all open files and all files that have closed within the last 3 months. No good just looking at the open ones. I want to see what happened when they shut the file. Did they carry out ongoing monitoring, that type of thing? And then I would, depending on the number of files then that I've got, I would probably look at something like 6 files per fee earner. And this is why it is so time intensive. Okay, What's the difference between, I hope that answers your question, Esther, but come back if you need anything. What's the difference between source of funds and source of wealth? Source of funds is where's the money come from? So the bank, building society, that type of thing. Source of wealth is how did they acquire their wealth? Okay, so in this is straightforward. The AML, it's got nothing to do with the audit, and it's something that I would recommend everybody goes away and make sure that their fee earners understand what it is, because it's vital. As I say, it really puts your firm at risk if your fee earners don't understand the difference between source of funds and source of wealth. So your fee earner obtains a bank statement from a client, and it's got an opening balance of 3 months ago, £125,000, which is going to form the form part of the deposit for a property purchase. That's fine. There's your source of funds, but where's the money come from? That cannot be the end of it. You have to ask questions. How did they obtain that 125,000? Was it a gift from somebody? In which case, you're going to need to carry out due diligence on the donor and on their source of funds. If they say, my mother cashed in her pension, and that's where the money's come from, you need to see documentary evidence from the pension company of the amount of money that was provided to the mother, what bank account it went into, and then it moving from the mother's account into your client's account. It's all time intensive, but it's absolutely vital that you do it. Okay, hope that answers. Anybody else got any questions? I think that's, oh no, we've got more. Does yes, if you go onto the DG Legal website, you'll find information on all the type of work that they do. I do a lot of the AML work, but we have got other consultants as well, and we've got a wealth of consultants. Sorry, this isn't a sales pitch, but there's consultants that work in legal aid work, for instance, immigration work, that type of thing. So yeah, have a look on the DG Legal website. Okay. Right, Anthony. Yeah, that's really interesting. There is provision within the, sorry, Anthony's asked, why would anti-money laundering checks not being carried out on crime matters? If you receive money on a private case to pay your bill, wouldn't you need to know where it comes from? There is provision within the money laundering legislation, and I think it's regulation 329, but I'd have to check. That money to pay a bill falls outside the legislation, and the Crown Prosecution Service has also published some information confirming that stance as well. So, but there is a proviso to it and caveat to it. The money that's received must be in relation to proportionate work. Okay, so if your fees are £250 an hour, that's fine. You charge your client in a criminal matter £250 an hour. But because you think he's got money that he's involved in the Brick Max robbery, say, although your fees are £250 an hour normally, you can't then charge him £2,500 because that's not. So yes, it's absolutely fine. Okay. Yes, you are, Anthony, handling money with probate matters. The fee earners don't understand what checks they should be doing. This is all getting into more anti-money laundering issues than an audit, but I'm just conscious that we'll run out of time. Yes, when the fee earners are, if they're acting in a probate matter, they're acting for the executors, or the firm's an executor. If money comes in, if there's money in accounts, they should be carrying out checks on how that money got there. A client phoned a couple of weeks ago, and they were instructed on a probate matter, and the executor walked in with £70,000 in cash in a bag. And fact, oddly enough, the bank wouldn't accept it. And the firm didn't know what to do. So, you know, I'm saying to them, they need to carry out a risk assessment of the deceased person. If that person worked in Tesco's all of their life on the tills, it's highly unlikely they'd ever be able to accumulate that amount of money in cash. If they were a senior manager in a bank, or a city trader or something like that, potentially they could have done. So you need to see all the bank statements, you need to see all the information. Where's that money come from? If that person was let's say they owned a nail bar or an ice cream parlour, then there are red flags there. And that money potentially should be being reported to HMRC. But yeah, they do need to carry out. Somebody said, sorry, Yvonne's asked, are you within the scope of the legislation when you do immigration work? No, you're not. You don't do transactional work. We're talking about money laundering. If you think about money laundering, it's dirty money in, clean money out. So it's trusts, setting up companies, conveyancing work, that type of thing. Okay. So you're fine with immigration work, and you don't need to carry out a risk assessment. The an independent audit, but you need to document why, because you'll still have an anti-money laundering policy. Yes, you should, Anthony. Absolutely. Anthony's asked whether you should have two separate questions on your file review forms. One is the source of funds and the other is the source of wealth. Yes, you should. And that forces your fearless to think as well. Unfortunately, a lot of it is a tick box, because I know everybody's really busy. So, you know, they don't necessarily think there's an issue. But yeah, you should definitely have more than one question. And there should also be ongoing monitoring carried out throughout the course of the file as well. Any changes, that type of thing, should be ensured that they go back and carry out the risk assessment again and determine whether or not that risk to the firm and to them as individuals. Because what they need to understand is it's they that are at risk, 5 years in prison if they're facilitating money laundering. What about family work? Rohit asks, surely there's no risk there. No, there's not, providing that you're not then involved in the sale of the property, because then, of course, you're then falling within scope of the legislation. And then Mark Cairns, sorry, other than checking that money received by the firm to come from the source identified and verified at the beginning, when would ongoing monitoring should be carried out throughout the course of the file? Any change, okay, your fee earner should understand, any change should result in a further risk analysis. So if your client changes their bank account whilst it's ongoing, if they change their name, let's say, because they got married, you want to see documentary evidence of that. If they change their address, if they're not doing a conveyancing matter, or even if they're selling, for instance, purchase and sale, you'll want an explanation of why that's happening. But strict, as well as ongoing right throughout the course of the file, before, if it's conveyancing matter, before exchange, I would have on your risk assessment form on your file a tick, have you carried out a check to ensure nothing's changed, something like that. And then again before completion. In relation to probate and trusts, are key points within the progress of the file. So you as a firm needs to determine what those are, and you should be explaining to your fee earners that they need to be sure that they're carrying out that work. Okay. I think that's, have I missed anybody? I think I have. Right, I think that's everything. So you will get a copy of the slides and a copy of this tomorrow. And if you've got any queries, if you're not a client of DG Legal, have a look on their website and see if it's something you would want some sort of retainer with them. But if not, just you can just contact us and we will help you, I'm sure. Okay, thank you.
Thank you for that, Pat, and for answering all those questions. And thank you everyone for joining us today. As Pat said, slides and a recording of the webinar will be sent over tomorrow. And this afternoon, you should also receive an email asking to rate us out of 5 stars. So if you have enjoyed today, please do leave feedback, and we also welcome any suggestions for future topics. And last thing to be said, our series of webinars continues on the 2nd of August, when we will be presenting on British nationality law with Sean L. from the Garden Court North Chambers. Thank you everyone for watching, and have a good afternoon.